Bitcoin versus Ethereum. Two of the biggest names in cryptocurrency. But what's the future for these digital giants? Are they just the start of a larger revolution, or will one rise above the other? In today's video, we're diving deep into the key differences, challenges, and potential of both Bitcoin and Ethereum. So, let's break it all down. First, let's talk about Bitcoin. Created in 2009 by the pseudonymous Satoshi Nakamoto, Bitcoin was the first ever cryptocurrency, pioneering the concept of decentralized, peer-to-peer transactions without a central authority. Essentially, Bitcoin is digital gold, a store of value and an alternative to traditional currencies. Its scarcity, with a total supply capped at 21 million coins, is a big reason why it's seen as a hedge against inflation. Bitcoin's primary use case? It's an investment vehicle and a store of value. People buy Bitcoin with the hope that its value will appreciate over time, similar to how people invest in gold. Bitcoin's blockchain is incredibly secure, and its proof-of-work consensus mechanism ensures that no one can manipulate the network. But there's a catch. Bitcoin's transaction speed is relatively slow, and its energy consumption is a major concern. While Bitcoin has proven itself as a solid store of value, can it really become the world's primary currency? Or will it remain a niche asset in the world of finance? Now, let's talk about Ethereum. Launched in 2015 by Vitalik Buterin and others, Ethereum's blockchain takes things to the next level by introducing smart contracts, self-executing contracts with the terms of the agreement directly written into code. This has made Ethereum the backbone of decentralized finance, or DeFi, and decentralized applications, or dApps. Unlike Bitcoin, which is mainly used for transactions and storing value, Ethereum aims to build a decentralized internet. Through smart contracts, developers can create everything from finance protocols to games, NFTs, and more. Ethereum is the platform that has enabled the rise of things like NFTs, that's non-fungible tokens, and decentralized finance, which has transformed how people borrow, lend, and trade. Ethereum's flexibility and programmability give it a massive advantage in terms of use cases. However, Ethereum's biggest challenge has been scalability. Transactions on Ethereum can get expensive and slow when the network gets congested. But with Ethereum's transition to Ethereum 2.0 and the switch from proof-of-work to proof-of-stake, things are looking up in terms of scalability and energy efficiency. So, how do these two stack up against each other? Let's break it down. First, purpose. Bitcoin is primarily a store of value, while Ethereum is a platform for building decentralized applications. Bitcoin is often called digital gold, while Ethereum is known as the digital world computer. Second, transaction speed and cost. Bitcoin transactions are slower and generally more expensive, especially when the network is busy. Ethereum, on the other hand, offers faster transactions but can suffer from high gas fees when demand is high. However, Ethereum's transition to Ethereum 2.0 could dramatically reduce gas fees and increase transaction throughput. Third, energy efficiency. Bitcoin uses proof-of-work, a consensus mechanism that's highly energy-intensive, leading to criticisms of its carbon footprint. Ethereum's shift to proof-of-stake, however, has made it much more energy efficient. And finally, security. Both networks are incredibly secure, but Bitcoin's simple use case as a digital currency makes it slightly more robust in terms of long-term security. So, what's next for Bitcoin? As the first and most widely recognized cryptocurrency, Bitcoin has already achieved a degree of institutional acceptance. Big companies like Tesla, Square, and MicroStrategy are holding Bitcoin on their balance sheets. It's also becoming more accepted as a form of payment, with companies like PayPal and BitPay enabling Bitcoin transactions. Bitcoin's future will likely remain focused on its role as a store of value. While it may not replace the dollar anytime soon, it could act as a hedge against inflation, particularly in uncertain economic times. Some argue Bitcoin could even become a global reserve asset, a digital version of gold. As for Ethereum, the future looks incredibly exciting. With the shift to Ethereum 2.0, the network is becoming more scalable, more sustainable, and more secure. The rise of DeFi, NFTs, and the broader decentralized Web3, is all built on Ethereum. More and more industries are exploring how they can leverage Ethereum's blockchain, from finance and healthcare to supply chain and gaming. If Ethereum can solve its scalability issues and continue to attract developers, its role in the digital economy could become even more important than Bitcoin's, particularly for the growing world of decentralized applications and smart contracts. So, what's the future for these two cryptos? In short, both Bitcoin and Ethereum are likely to play major roles in the future of finance, but in different ways. Bitcoin's value as a store of value and hedge against inflation could solidify its place as digital gold. Meanwhile, Ethereum is evolving into the backbone of a decentralized web, with its applications touching every sector from finance to gaming to identity management. Both have challenges to overcome, Bitcoin with its scalability and energy consumption, and Ethereum with gas fees and security concerns. But with the innovation and evolution happening in both ecosystems, the future is anything but certain. One thing's for sure, both Bitcoin and Ethereum will continue to shape the world of crypto, and perhaps, the world at large. Which crypto do you think has the brightest future, Bitcoin or Ethereum? Drop your thoughts in the comments below.